Hi, welcome to another edition of Frequently Asked Questions. My name is Jesse Rivera. I'm a licensed mortgage broker in the state of California.
And I'm Sean. I'm based out of Miami Beach, and I'm licensed in most other states. Yeah,
Yes. Um,
yeah.
so how's it going, Sean? How's the weather out there? You get any of
Uh,
the hurricane?
no, we didn't catch any on this side at all. Just a little bit cloudy, but that's pretty standard for this time of year. Cloudy and
Yeah.
80. So,
Yeah. Just an interesting story. We both worked together in Portland, Oregon, at an
mhm,
office in near Tiger
yeah,
in Portland, Oregon, and we both left for sunnier venues. I'm in Long
yeah,
Beach,
yeah.
California,
I'm
and
in Miami Beach. Yeah,
yeah, much better
yeah,
here. Much better.
sure. Yeah, yeah. I think it's an improvement for both of us for sure. So,
Yeah.
yeah,
So today,
absolutely. So, what are we talking about today?
today we're going to talk about the five reasons that you should refinance your mortgage today to get
Hmm.
it done today. And
Yeah.
the five reasons. The first one I'm going to start off with is the most obvious one is just to lower your interest rate and lower your monthly payment. With today's fantastic interest rates, it's so easy to get a much lower monthly payment, and that will help your bottom line each month.
Okay, great reason. All right, I'm going to talk a little bit about doing renovations on your home. With the market the way it is right now, very competitive on the buy side. It can be quite painful to go out and write 20 offers, and if you're just not having much luck there, then maybe just hold what you have. Do a refinance, pull some cash out, put in that pool or redo that kitchen that your wife's been complaining about for forever. I don't, or maybe you're the kitchen guy. I don't know, but in any event, this is a great opportunity to be able to knock that all out and
Yeah,
just hold what you got for a while
yeah,
and build
especially.
equity on top of that. Build more equity with the renovation. So
Absolutely. So yeah, I see that a lot in my area. I'm in Long Beach, Southern California, and there's not a lot to buy out here. So people are just opting
yeah,
to, if they need another bedroom, another bath, just to take that money out to refinance and to make a bigger house, as their family grows. So that's a great option. So reason number three is to consolidate some debts. I'm doing a loan right now, a refinance for a gentleman. Not only are we lowering the interest rate, it's a big loan. I mean, his house is in like worth 1.5 million. So the loan's going to be like $900,000. So only are we lowering his payment by $700, we're going to pay off a lot of his credit card debt. And that credit card debt is like at 17, 18% interest. And we're going to pay that all off. So we're going to save another $700 a month in credit card payments.
sure,
And that's a,
absolutely,
I mean, it just makes obvious financial sense to me. Instead of paying
sure.
18% interest on these credit card payments, you're going to pay 3% interest on these credit
Mhm.
card payments. Get them paid off. Your credit score will go up because you're paying off your credit cards, and your payment will go down dramatically. So another great reason.
Yeah. So I don't know if you remember this or not, Jesse, but that the very first loan I ever did when you and I were working together was a refinance, and it was some friends of my wife's, and
Uh-huh.
we lowered their interest rate and paid off a bunch of their debt. It actually saved them $700 a month,
Yeah,
and for them that was life changing.
it's
Their
huge.
quality of life went through the roof. $700 a month, when you're
Right.
living paycheck to paycheck, is a big deal.
Yeah.
And that was the first one I ever did. So it's like, wow, this is such a cool feeling, to do something
Right.
and help people, and have a decent career for myself and still be able to do that. So yeah, it was
Yeah,
phenomenal.
it is a game changer. But I mean, I think the key here is not to run up those credit card debts again. Try and just keep them
Absolutely,
low.
yeah, absolutely. Yeah, don't go
Do
get a brand new pickup now. Yeah,
it. Right,
yeah,
right.
because we've seen that side too. Yeah,
Yeah,
yeah, for
exactly,
sure. So
exactly.
yeah. So, all right, let's talk about the other reason to refinance is to get rid of mortgage insurance.
Oh
Now, I'm a
yeah,
fan of mortgage insurance. Most people are not. Most hate it, but mortgage insurance does help people get into a home without having 20% down. So there's a tremendous value there. But as soon as you can get rid of it, you absolutely should,
right,
because it's just throwing away money. If you could get rid of it, you should. And at this
exactly.
point, when you get your loan to value under 80%, meaning the house has appreciated with the economy going the way it is. The house over 2 or 3 years has appreciated to where when you bought it 3 years ago, now it's worth a whole lot more. And there's an 80% loan to value that once you're at that threshold, you can drop it, and then your bank's required to drop it at 78% loan to value. But that's based on the original purchase appraisal. So if your home appreciates tremendously over 2 or 3 years, your bank's not going to say, hey, your home's appreciated, we're going to pay for an appraisal for you so we can drop your mortgage insurance. That's not going to happen. So it's going to be up to you to say, hey, I want to refinance, I want to do an appraisal and get this dropped. And if your current lender won't work with you, the bank that holds your note, then call either one of us or call anybody, but get it refinanced and get rid of that mortgage insurance.
Right. And if you have an FHA loan, that mortgage insurance never goes away. So if you bought your house with an FHA, a modern FHA loan, within the last probably 8 or 9 years, your mortgage insurance will stay there forever. So if you refinance, if you refinance and get rid of that mortgage insurance, you're going to save $200, $300, $400 a month. That mortgage insurance is a little spendy. So that's another fantastic reason. Another reason is one dear to me is I'm an investor, and especially for someone like me who's getting near retirement age, a lot of people hold, especially in my area, a lot of people hold a lot of their financial wealth in the equity of their home, and it just sits there. If you have a lot of equity in your home, it's just going to sit there and do nothing for you. So why not do something with it? Refinance, get that money out, and maybe buy an investment property, right? Buy a property that will appreciate over time. Buy a property that might have some cash flow so that you get a monthly cash flow each month, instead of just, if you do nothing with the equity in your home, you might as well just dig a hole in the backyard and you bury it. It's doing absolutely nothing for you. So it's just another option. It's not for everybody, but it's something to think about.
Well, you and I talk about it a lot too, and every financial advisor you talk to, they're going to tell you take the money out, because mortgage interest rates are so low. Take that money and put it to work, and every single financial advisor you're ever going to talk to is going to say that, unless you're like right at the end of life and you're not planning on anything. You're just trying to coast and keep it simple. But those financial advisors, they know what they're talking about, and we all agree with them. It's not just that they're trying to churn more money and make more commissions off you. Like, that really is the key, is to put all that money to work.
Exactly.
I mean, I'm telling you right now, the day I turn 62, I'm doing a reverse mortgage.
Me too.
We'll do another video on reverses, but you should absolutely have every dollar going to work for you. So
reverse mortgage.
Okay, so we've got some. Go ahead. What's that?
I was just going to agree with you on the reverse. As soon as I turn 62, I'm getting a reverse mortgage. It's such a great product that has a bad reputation, and we will do a video on that eventually.
Yeah, we will definitely. Well, they used to be terrible.
They used to be terrible, and they had a bad reputation.
Now they're incredible. It's just hard getting the word out there to everybody. But now they're awesome. So we have a lot of great reasons of why you should refinance. So let's talk about when. Because this is another question we get a lot.
So when should we?
Well, I'm waiting. I don't know. I think the market's going to go down. It's going to take a turn. And it's like, okay, well, all right. Here's the thing, man. Interest rates are already at all-time lows. And that's artificial. The government is buying mortgage-backed securities like crazy. They're foot on the gas pedal all the way on those, keeping it artificially low to keep the economy rolling, keep things moving as much as they are. They're not going to go lower. Like when you read some headline somewhere from any one of the places that like to churn out news like crazy and generate clicks on their websites. The Fed's giving money out at 0% interest. Well, guess what? They're giving that money to banks at 0% interest. The banks still have an interest rate. It's not going to go lower than what it is right now. We can do refinances at 2.25. I think there's very few little products you could do at 2.0, but the truth is we're not doing those. You're probably not doing too many at 2.25. I'm not doing any at 2.25 right now because there's a buy down. There's points on those, and it's not a good buy. And any good loan officer is going to show you exactly where it makes financial sense for how much points to buy or how long it's going to take you to break even. So anyway, that's a long way to say that interest rates are already where they're going to be. They're at all-time lows, the lowest we've ever seen in our lives. They're not quite as low as they were 6 or 8 or 10 months ago, but they're they're within $10 a month. You know,
Hmm.
it's like it's nothing. The difference of what they're at is right where they're going to be for quite a while. Uh, are they ever going to go down? I would say there's pretty much zero chance of that, but I don't have a crystal ball. Are they going to go up, or when are they going to go up? Of course, if I knew that exactly, I'd be rich too.
Yep. I
But
think they
there's no
will
way to
go
know
up.
how long we're.
Yep.
Yeah, I
I
think
agree
they
with you.
will. I
They are
absolutely
going to
think
go
they
up.
will. I mean, they have to. It's just a
Yep.
matter
They
of
have
when.
to.
There's no one here that I don't think there's any single professional, any financial industry anywhere that doesn't think they're going to go up at some
Right.
point. Is it
Right.
going to be next month? Maybe not. Is it going to be 6 months? Maybe not. I don't know.
Yeah.
It could be six, though. Pretty easily, it could. I mean,
Right.
just a couple of years ago, we had it jump over a whole percent inside of like a 3 week period, and
Yeah.
that was just a nightmare. So
Right.
crazy things have happened like that. When is it
Yep.
going to happen? We don't know, but
Yeah.
it's going to. So when is the time to refinance? I'd say if you've got a reason to refinance or two reasons to refinance, now is the time to do it.
Yeah. I mean, you have a decision to make. You can refinance now when the rates are the lowest it can be, or you can try and gamble and wait it out. And, the problem with gambling is a lot of times you lose.
Yeah,
So why not just do it today? Get
yeah,
it done.
right. Well, and on that note too, everybody seems to be under the impression like there's gonna be a big market correction or something's
Yeah.
happening. Like, we're already in a little bit of a recession here, people. It's like
Mhm.
if this doesn't show you that it's not going to crash, it's not going to crash. This isn't going to be like 2009, 2010. There's just so much regulation in place. It's never going to happen like that again.
Right. Right.
So,
No, I
the debt
agree.
to income ratios that we're required to follow now are much more strict than they were back then. I mean, back then there was negative amortization loans that people were paying and paying and paying, and the debt was going bigger and bigger and bigger.
Right.
So all of that has gone now. That's not going to happen again.
Yep. I agree with you
Yeah.
100%. Fantastic. Those are some great reasons to refinance now. So if you're interested in refinancing, give Sean Young a call, or give Jesse Rivera myself a call. We'll get you refinanced.
Yeah.
And great. I appreciate you watching. And don't forget to subscribe if you're watching on YouTube. Oh, you got something, Sean?
Yeah. Yeah, yeah. Oh, well, on your like and subscribe thing, get that all going. But also, we welcome any of our competitors, any other loan officers anywhere. Post in the comments. If there's
Yeah.
something you agree with, let us know. If there's
Yeah.
something you don't agree with, let us know. We'll talk
Yeah.
about why, and we'll discuss it publicly, open forum.
Yep.
We want this to be as open forum and transparent as possible. We know there's plenty of business to go around. We don't have to be all secretive or
Oh,
hide
yeah.
anything. So,
Yeah.
there's a tremendous need for what we do, and we love what we do. We just want to
Right.
share it with everybody.
Yeah, agreed. And if you have any questions about what we're talking about, please just go ahead and put them in the comments. So if you're on YouTube, subscribe. If you're gonna watch this on Facebook, like the page, and if you're on Instagram, give us a follow. So my name's Jesse Rivera. I'm with Sean Young, and we appreciate you watching. Have a good day.
Thanks, Jesse. Take care.
See you later. Bye.